Hi, this is Robert Kiyosaki, and you're listening to Capital Hacking. This is the most important thing you can listen to today.
Here's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
Capital Hacking begins in 3, 2, 1.
Welcome back to the big show. Josh McCown here with John Edward. This is the Capital Hacking episode 400. We've been waiting for 400 episodes for this one, John.
I'll tell you, Robert Helms, what an amazing guy. An inspiration. You know, I've heard of the real estate guys for years, and to get an opportunity not just to meet him, but to interview Robert he is the perfect person to be on this 400th episode.
Yeah, and he's proud of it too. He remembers helping us get into this business and helping us learn about podcasting when I met with him years and years ago. So I wanted him to be a proud father today. You know, he's a proud papa of a great business that we're all a part of, and a great podcast that we're all a part of, a community. So I think you're going to love this show. What are your big takeaways? I think he's going to teach you something that you never knew you didn't understand well until, just like me, is the difference between money and capital and currency, and just how to, once you open your mind to the difference of those components, you literally have more power. And I'll let him explain that, so I won't steal all his thunder. And then the last thing, how about his way of building community and adding value first? I think you'll see why this is a model you could use to catapult your career and your investments.
And he talks about your two best friends, clarity and focus.
He's good at it. He's great at it. Enjoy.
Let's go.
This is it, John. I know I've been talking about Robert Helms, and I love talking about him, and I love bringing up his business on our show. But how about getting the real guy, John? Is this the best?
You know, and we were talking a lot about who we would like to have on our 400th episode. And Josh, you spoke so highly of Robert Helms from the Real Estate Guys. He's like the OG of teaching real estate and syndication. So I'm super excited. Robert, without further ado, can you just tell our audience a little bit about yourself and who you are, and we'll take it from there.
Josh, absolutely. Congratulations. 400 episodes. My goodness, most podcasts don't make it out of the garage, and here you guys are. So hats off. I was fortunate enough to be born into a real estate family, if you will, which doesn't mean I had a silver spoon. It means I had a hardworking dad who sold real estate and recognized that if he became his own best client, that would be better for his future. And Josh, you knew my dad, Bob Helms, the godfather of real estate. And I just got on this track. I got excited about, Brian Tracy says, whatever you're interested in between the ages of 7 and 14 is a good insight into your future. My favorite thing then was to play Monopoly. And it still is. So I've been a collector of real estate for a long time. And, you know, when you've been in real estate for all these decades, you try on different things, you get exposed to different things. So I'm in lots of different asset classes in lots of parts of the world. And it's all good. Even the things that don't go great, you get the lessons from, and it makes you a better investor.
Wait, I just, you know what? You just said something and put a light bulb in my mind. I've always heard of people saying, I'm an investor, I invest in, but you're a collector of real estate. Can we just dive a little bit into how you chose that word?
Yeah, so it's what I call personal investment philosophy. Josh has seen me do this a dozen times, but it's that every investor is different. We don't all want exactly the same thing. Some people need cash flow. Some people need long-term appreciation. Some people love the art of the deal. Some people are more interested in creating fabulous places, like Josh and Melanie and you guys do. So everyone has a different kind of reason to be in investing. And for me, part of my personal investment philosophy is I never sell. I don't buy and sell. I don't trade. I don't flip. I hold on, because every property that I ever got rid of, normally I would 1031 into something new, but almost every time I regretted it. You know, you get a property up to the point where it's performing well and you're making money, and you get lazy landlord syndrome sometimes. And it's like, well, I could raise the rent, but I don't need to. Well, the more property that you have over time, the more of a financial fortress it builds around you and your family. And so I fashioned myself not an owner of real estate, but a collector. We don't measure our wealth in real estate by dollars, but by doors. And that's a paradigm too. When you think about the dollar's going down in value every day. So it doesn't really matter how many dollars I have. $100,000 in 1960 was very different than $100,000, today. But a 3-bedroom, 2-bathroom house in 1960 housed a family, and that's true today. So I just like to collect doors.
I got to add to that too, brother. See, this is the kind of stuff you get when you go to seminars with Robert Helms. And there's so many of these elements stuck in my head. But by the way, there was a chart this weekend on LinkedIn. You get some infographics every once in a while, and they showed a bar of gold and what it bought you in 1974 for a house. So bar of gold versus a house, right? So, and this bar of gold bought you the Brady Bunch house in 1974.
Okay.
Really nice middle-class house. Really nice, right? Today, a bar of gold buys you an aspirational house, to be honest with you. And that's the difference of the dollar to the, so the aspirational house today is 1.3 million, they're saying. So the same bar of gold then is whatever, sub $200,000 now is $1.3 million, whatever. You would know better than me because you do know the commodity prices. All I remember is this visual, Brady Bunch house versus a pretty aspirational house to my standard, at least. And I thought to myself, how do I interpret this picture? And I drifted back into all my lessons with Robert Helms. Because, folks, I'm just going to geek out a minute here. So I first meet Robert Helms through David Zook originally, and he says, you got to meet this guy. And I go on some seminars with him, the real estate guys, which highly recommend. The one we used to do and still do regularly is called The Secrets of Syndication, Successful Syndication, right? Secrets of Successful Syndication, S-O, teach me again. What is it? S-O?
SOSS are the initials,
right.
But yeah, it's our 2-day introduction into the world of raising capital to do bigger deals.
And you opened our eyes there, but then I got to go to another one you did called The Future of Money. And in The Future of Money, this is John, you would love this because we don't talk about this much on the show, but he helped us envision money as like, first of all, I'm going to let you teach it. Money versus currency versus gold, commodities. How did you start that speech? If you don't mind, go back to, this is something you've really become a master teacher at over the years.
Well, thanks for that. It's even something you guys talk about, which is capital. Capital is different than currency. Capital is what you put to work, whether that's your time, your talent, the production that you create in your life. If you do it right, you live below your means and you create economic value and you put that value to work, right? Chapter 1 of Rich Dad, Poor Dad. The rich don't work for money. They let money work for them. And so we are raised in a capitalistic society where we see businesses. We may not be part of that. We might just be employees or students, but we have to interact with commerce. And so we kind of understand, hey, there's something that I want and it costs me money. And the way I earn money is trading time for dollars. And dollars are currency, but that's not the same as money. So that's hard to get your mind around. We are so conditioned to the price of things, even when we think about gold. So what is an ounce of gold worth? Well, an ounce of gold is worth an ounce of gold. No matter what, it's an ounce of gold, and it will be in 100 years. And it was, for this one, a few years ago when it was minted. And so if you use the example of gold, gold has been money for $5,000 for 5,000 years. And yet we're so conditioned to think in terms of dollars. It just happened to me. So people say, well, what's gold worth? Well, in 1950, an ounce of gold would get you a custom tailored, nice looking men's suit. And in 1984, an ounce of gold would buy you a custom fitted tailored men's suit. And today, an ounce of gold at around $3,300 US would get you an excellent custom tailored men's suit. So the value of the gold hasn't changed. Now, it's not about gold. Gold is a hard asset, like real estate is. So we look at that 1960 3-bedroom, 2-bathroom house, and that same house today, the Brady Bunch house is a great example. What it cost in dollars is a lot more. But that's not because dollars have gone up in value. It's the opposite. Dollars have gone down. This ounce of gold was once $350. It was once $35. And all that's changed is the value of the dollar. And, you guys have listeners in a lot of places. We at the Real Estate Guys have listeners in over 190 countries, and they're not all using the dollar, but they're using some form of currency. And that's what we call fiat because it's not tied to anything. There was a period of time when you guys were growing up that the dollar was tied to gold and it had real intrinsic value, but that's not true anymore. And so because of that, we have to think in terms of utility. So that's why I think of real estate in terms of doors. It's not how many dollars do you have, how many ounces do you have, how many barrels do you have, how many acres do you have. That is value.
I like it because maybe that seeped into my mind. Now my LinkedIn talks about having 1,000 acres of waterfront, beautiful real estate. So, but John, is your mind a little bit blown, or do you want to dig in on this a little more?
I mean, you articulated that better than anyone I've ever heard when you were talking about, currency versus commodities and investing in hard assets like gold or real estate or acreage like Josh has. And, I think that's so important because we do say in real estate that cash is a position, which it is, but it's a depreciating position. It's going down if we're not utilizing it.
Well, that's such a good point, John. Every minute you hold on to a dollar or a euro or a pound, it's going down in value. It's true across the board. And you hear people say, well, the dollar's strong or the dollar's weak. All that means is, what does the dollar look like against other fiat worthless currencies? But when you compare the dollar to things that matter, things that are real and tangible, that put true wealth in our side of the equation, then the dollar is worth less. Not worthless, but worth less. It buys less today than it once did. So here's your mission. You hear Robert Kiyosaki say cash is trash. And what he means by that is when we're holding on to dollars, they're going down in value. So what we need to do is live below our means, earn a lot of dollars, and then take that purchasing power of currency and turn it into something real. An investment property, an apartment building, a beautiful hotel with a golf course. You take those dollars that by their very nature become less valuable every day, and you buy something that has the ability to become more valuable. When you guys take a property that is beautiful, but you turn it into an experience with cash flow and guests and all the magic of hospitality, the value increases, even though the dollars you use to buy it go down in value.
Yeah, interesting.
Wow.
Yeah.
Okay.
Go ahead, John. I want you to finish on this because I love it. But
Okay. So here we go. So in '97, you started the Real Estate Guys. It was a radio show, right? What were you talking about? What was the asset class to buy in '97
Good question.
versus right now in 2025?
Yeah, great question. So the answer is anything, right? Anything we could have bought in 1997, we put back and wish we had. But the origination of the show is very different than it is today. I was selling real estate actively with my dad, and I had been in college radio and met a guy who was teaching real estate agents how to renew their licenses. He was holding classes to help agents get those required continuing education hours. And I came up to him and I said, hey, Charlie, you're teaching real estate agents how to renew their licenses. What if I got a bunch of real estate agents on a cruise ship for a week? What would you charge me to do their 45 hours? And he said, well, if you send me on a cruise, I'll do as many as you want. And so we did our DRE, Department of Real Estate, DRE at Sea for a lot of years. That became eventually the Investors Summit at Sea. But back then, we were just talking to people about mostly listing and selling their residential homes. We did talk a little bit about investing. Jim Rohn said you should have 2 bicycles, one to ride and one to rent. And the same thing's true for rental property. And little by little, we started to develop an audience. Now, back then, we had no aspirations. It was just an hour we spent once a week on a local radio station. We would drive up to the station early in the morning and have a conversation on the way up about what was going on in the market and what we should talk about. But today, it's so much more strategic than that, right? Because everything changes. The principle of real estate hasn't changed. The idea that somebody lives or works in your property and pays you rent for it, whether that's by the night or by the year or by a 10-year period, whatever that is the economic model for real estate. Pretty simple to follow. People that invest in stocks look at companies and they have very convoluted compensation plans and cost centers and, taxation and intellectual property. Real estate's simple. It's so simple, but it's almost too simple where people think, well, it can't be that exciting. And I'll tell you, you buy your first rental property and you get a tenant in there and you're making $122 a month. And it's like watching paint dry. Like, it's not very exciting. But it's as you build those assets. And then if you can find something you're passionate about, this is what I appreciate about you, Josh, when you really have that passion to serve and it shows in what you do in real estate, then watch out. Now it's not just a commodity. It becomes something a lot more special than that.
Yeah, no. John, like I've told you over the years, man, learned so much from you, Robert. And, there's a couple other things that you've done for this world, and we'd love to dig in and find out a little more why. So one is a principle that I think, John, we were just chatting about it earlier. Let's talk about one of your great principles. Now, you may not have come up with it, but I'll give you and your team credit for it, and that is that we build farmers. We train farmers, not hunters.
Yeah.
And this goes to your entire educational philosophy. And you went from, it sounds like your original core business was syndicating resort, what do you call those things? Cruises, by putting a educator on board for no charge to you. And then, getting a bunch of people to get on a boat and do classes for continuing education. And then you migrated through the different types of ways of getting into real estate. But why did farming versus hunting become so paramount to all of your strategies? And what is
it's a great question. So many salespeople in pick an industry, they're hunters. They wake up hungry and they got to go kill and eat something. And they will say and do whatever they need to say or do to make a sale. And we've all dealt with these kinds of people. We don't feel better after having dealt with them. So a great salesperson can have us feel wonderful about the product and the service and all those things. And there are, thank goodness, outstanding salespeople. But an average or mediocre salesperson is just trying to eke out a living. And that is one way to approach commerce. But the other way is what a farmer does. What a farmer does is tills the soil and nurtures and is patient and waters and pays attention. And slowly over time, the crop yields. And it's not whether it will, it's when it will and how much. And so it's a very different philosophy. It's patient. And when it comes to something like selling real estate, which I did for a lot of years, thankfully don't do that anymore. But when I did, my biggest kick in the whole thing was when I could help a first-time buyer, someone who was renting a property, learn all the things they need to know to become an owner of real estate and hopefully set them on a path to own not just that house, but lots of real estate. And so the reality of that is you have to be patient. When the student is ready, right, the teacher appears. Well, when the buyer is truly ready, then the right salesperson appears. And too many salespeople want to make it about them and their agenda and when their kids need to eat instead of focusing on the client. So it really is just client service and really taking that to heart. And you see this in hospitality. When the guest comes and entrusts a week of their life and hard-earned capital to stay all the places they could pick, and they pick your resort, you want them to leave there having had a fantastic time, feeling like it was well worth the time and the money. And then the important part, telling all their friends about it, whether it's on social media, why they're there, or when they get back and people ask, or if they just get in a conversation with somebody. And that's what being a farmer is. It's being patient. Now, that's easy to say and hard to do. You do need to earn a living and so forth. But if you can create your business in such a way that you're farming, you will have much more consistent income over time, and you'll actually make a lot more money.
Hey guys, it's John Vroman, founder of Front Row Dads, and you're listening to Capital Hacking, the best investment you'll make today.
It's amazing. And Robert, when did you start your seminars? When did those conferences or masterminds start? Just curious.
Yeah, so way back in the day, before the real estate guys even started, I would do a quarterly, I'll call it a seminar, on setting goals and on time management. And it seems that anybody that wants to be a speaker talks on those two things. I don't fashion myself a professional speaker. I'm not out there on the circuit, but those were two things that helped me tremendously in my personal success. Learning to get control of my time, and time is not a zero-sum game. Part of capital hacking is time hacking, right?
Yeah.
And then the goal setting part, having clarity. Most people are nebulous and vague when it comes to their future. They say things like, I want to be rich, or I want to be healthy. Well, those are great sentiments, but those aren't goals. And so I started to really study and then implement the process of goal setting and had tremendous results in my life. And so now for more than 30 years, I've been teaching goal setting annually, and it is a labor of love. It's something that we do as an event, 2.5-day event every January. But that evolved into this idea that we could teach other things as well. And one of those things was investment real estate. I was putting together a little portfolio, and it was successful, and we were making money, and we were building equity, and we had cash flow. And I was just asked to, how do you do that? Share that. And it started at our real estate brokerage, which we didn't own. My dad and I were just agents at a big company, but we specialized in residential income property as well as selling houses. And so our broker would say, hey, would you come teach the other agents about what you guys are doing, not from a sales point of view, but from an investing point of view? And so we would, get a dozen people in a conference room and say, hey, here's how you become your own best client. And that led to a little seminar we were doing at a title company open to the public called Build Your Real Estate Empire. My dad and I taught that one evening a month for a bunch of years, and we found clients that way. But we also helped people become mentally engaged in owning property and not paying other people to rent the property. Nothing wrong with renters. I got lots of them and I love them. But eventually, folks want to work themselves into a position where they're the landlord and not the tenant. And it doesn't work across the board, but it became clear that there was a lot of folks out there who wanted to learn this stuff, and there wasn't that many places to go find out about it. Now today, oh my gosh, right? There's just podcasts and webinars and seminars and books, and there's a ton. It makes it almost more difficult when you have so much information out there. But slow and steady wins the race, right? You just little bits at a time and what resonates with you. And, there are more real estate podcasts literally than there are hours in the day today. So, it's a zero-sum game. You need to be discerning. You need to pick and choose and get that clarity. Once you have clarity, that's your first best friend, clarity. The next one is focus. And when you focus on something, lo and behold, it happens. So clarity and focus are the best tools you have.
I want to dig in on this for just a moment, because for years I've watched you send me a note, or others in your team have sent me a note about the goal setting, and I know how passionate you are about it. I also know that you really cherish the mentors that have led you to where you are today, the Jim Rohns, the Brian Tracy, the Tommy Hopkins, and all these great people who, by the way, I just want to give you credit. Somehow they're all part of your community. Of course, Jim has passed away, but they became part of your environment, your community, and you went from admiring their content to embracing them in your relationships. And that's a gift you have. But my point is, you've always talked about goal setting. Could you break it down a little more basic? So when you're in that room, that first day of your seminar, and you've given the talk about clarity and focus, and someone comes up to you, what do you have them do, worksheets and show them to you? Is that kind of how you do it? And then you challenge them? What would be the number one way you help people have a breakthrough on clarity?
Yeah, so it takes a while to do. Originally, these goal setting seminars I did were 3 hours. And what I could do in 3 hours is teach you the science of goal setting, how it works, what you need to do it, and then give you a outline and hope that you went home and did something. Well, what we discovered over the years is that people went, wow, that was a great seminar and really enjoyed that, and then went home and did nothing. So now it's 2.5 days where before we even set goals, the first night has nothing to do with goals. The first night has everything to do with being clear about who you are and how you show up in the world and what really matters. And so how I do that is through a series of more than 240 questions. Open-ended questions, and a big old workbook where you spend the weekend journaling and going deep. We live our lives mostly on a superficial level. Good to see you. How are the kids? How's the weather? But in reality, we need to get deeper than that if we're going to have any meaningful work, if we're going to get something done. We're just routine and habit followers. So some habits are great. A good habit serves you well. Now, a good habit takes a long time to get into, and it's easy to live with. But a bad habit is easy to fall into and difficult to live with. So the first thing we have to do is do an examination. If I could, I'd sit one-on-one with people and ask and follow up, but obviously I can't because it's a room full of folks. So what we do is we have you just journal on a whole bunch of things, some of which you would have thought of, but many of which you wouldn't have. And sometimes we have to come from a different angle to get your subconscious mind to produce the results. And it's fascinating to watch what happens. I will tell you that people get emotional. Not because we intentionally want to make them emotional, but when you get inside your heart and you recognize that what you want to do to fulfill your life, you've fallen short of, it can get kind of dicey. And Jim Collins, in his great book, Good to Great, says you have to confront the brutal facts. And if things aren't going well, you got to admit that. You don't ignore it. Most people want to ignore all the bad stuff. I think you got to look at that bad stuff square in the eye. And as Jim Rohn would say, put it into a small corner. You don't ignore the fact that something went wrong, that a deal went bad, that a relationship went sour. But you put it in context, and then you get the lesson. And if you'll get the lesson, then every day you're getting better. And that's the challenge for most folks. Some people have 20 years of experience doing something, and some people have 1 year of experience repeated 20 times. So the goal setting seminar is very, very personal. You've been to a lot of our events, Josh, and we're very social, and we have the happy hours, and we hang out, we get to know people. It's one of my favorite things, get complete strangers to become friends in a short period of time. But the goals event isn't like that. We don't even have a mingling session until the very end because it's so personal and so introspective. We always do it at a property that has little nooks and crannies and beauty and all the things so you can really go deep. And it's a gift you give yourself to go that deep. But if you'll do it, the work you can get done in a weekend is extraordinary.
Yeah, I mean, and most people, like you said, don't take the time because life gets busy and kids, pull all your time. And if you're not with your kids, social media could be pulling your time. And it sounds like your goal setting seminar is like other masterminds I've been a part of, where they facilitate questions and give you time to just go off and get away from your cell phone and get away from the world and really ask yourself really deep questions. And man, that's fascinating. I love that. Thank you for that share.
Yeah, John, all the answers you already have, right? At this event, I stand in front of the room, but I don't really teach much. In fact, I joke I've never had an original thought. To Josh's point, I've just had a lot of awesome mentors, and I pay attention to what they say. And I have the ability to recall a lot of it, and that's helpful to people. But what really matters is to pull that stuff out, those questions that you ask. You've gone through that process. What comes out of the paper came out of you. And sometimes we look at that and go, whoa, like when you have an idea for a business, where did that come from? Well, we could philosophize on that all day long. But the fact is, unless you get it out on the paper and look at it and analyze it and make a plan to follow it, then it's not going to make any difference. Brian Tracy says that the person who hears one idea and takes action on it is way more valuable than the person who hears 100 ideas and takes action on none of them.
So now let's talk about your strategy. So over the years, I remember one of the ways you became valuable to, I think it was it was Jim Rohn, that you became valuable as helping his events so that you could earn a time to meet him. Would you talk about that philosophy and how you see other people being able to learn from that? And do you still see a way for young people? I know John's son is extremely gifted in this way of networking and things. So tell us that story a little bit about Jim Rohn.
Yeah. So, Jim Rohn was an amazing, amazing man and mentor to me. And I had an opportunity to spend time with him alone on several occasions, which is just such a gift. He endorsed our book, which is something he rarely did. Just an amazing, amazing gentleman. And the biggest thing I could say about Mr. Rohn is he was exactly who you saw on stage when he was off stage. There was no difference. He was the same guy. And I learned just as much from observing how he lived as I did what he said. But there's a an opportunity, I think, for people today, the same as there was, 10 years ago and probably 100 years ago, to get into meaningful relationships. And this business, and all business really, is a relationship business. Real estate's a numbers business, and it's a property business, and it's a due diligence business, and it's an analysis business, but at its heart, it is a people business. And learning how to provide value to people to get in relationship is huge, because everybody needs something. And the way I first started with my original partner on the show, Charlie, is I taught a class called Jumpstart Your Real Estate Business, which was designed for a brand new real estate agent to become Rookie of the Year. And I would have people go, "Why are you teaching these new real estate agents when you're busy selling real estate?" I said, well, think about it. In every transaction, there's an agent that represents the seller and there's an agent that represents the buyer. And the better the other agent is, the smoother the transaction is. We all hope we get a great seasoned agent on the other side of the transaction. So what would be what Jim Rohn would call enlightened self-interest by teaching agents in our marketplace to become better at what they do. It's not a scarcity mentality. I mean, every now and then I might compete for a client, but more often than not, I need all the agents in the community to go out and list property. And when I list property, I need all the agents in the community to have buyers, because the chance that I have the exact buyer for the exact property isn't very high. But when you look at organized real estate, there's an awesome ability to leverage other people's talents. And so getting into relationships is actually strategic, but you have to have the right heart. I always ask myself, what can I do for this person? How can I be valuable to this person? Jim Rohn would say, learn to be valuable to valuable people. And I took that to heart. So I would have a skill or an ability or a connection that I could bring to the party. And I had to learn early that it wasn't about me, and it didn't matter if anything good happened to me. If I put two great people together, awesome things are going to happen. And if something splashes up on me, awesome. If not, that's okay too. And it's just a way that you approach business and life. And so we've had the great fortune, as you know, of getting to know lots of awesome people. The people that come on our investor summit, people like Peter Schiff and Robert Kiyosaki and Ken McElroy and George Gammon and Brian London. We don't pay these people. We never have. They come because they want to be there. I just had did a podcast with Robert. He's the guest we've had more than any other guest, and he's been on the summit. I think this will be his 9th year on the investor summit. And he's like a little kid. He's so excited about coming. He goes, I come because I want to hear the other speakers and I want to study. And yeah, I'll share if you want me to. But he sits in the room and he's in every session and he's got his highlighters and he's taking just copious notes. It's amazing to watch a guy who is an excellent teacher also prove that he's a fabulous student. And I think that's really, it's being thirsty and curious for knowledge. And then it's seeing how can you be valuable to somebody. And sometimes you put it out there and you're valuable and you help and not much comes back. But more often than not, it does. And it might not come back immediately. I would teach new real estate agents, hey, the busiest agent in the office probably has 15 listings and can never hold all his properties open on the weekend. But you don't got anything going on. Why not go to a great agent and say, hey, I'd be happy to hold one of your houses open for the weekend. That's a win for him or her, because the client loves that. And now you have an opportunity to meet and talk to people, and maybe you'll sell the house. But even more importantly, you'll get all the lessons from being in there and having that listing for that afternoon. So it really is approaching life in a way that you can help and then letting the magic work.
Hi, this is Melanie McCallan. Josh and I are just so grateful for the many investors who have already joined us at Accountable Equity. Accountable Equity is so much more than a capital group. It's really a community of accredited investors that want to learn and grow together. I just want to personally invite you, if you want to find out more about this type of investment and see if it's right for you and your family, please visit us at accountableequity.com.
Hey, it's Hal Elrod, author of The Miracle Morning, and you're listening to Capital Hacking. Enjoy.
So good, Robert. I mean, now you see what I mean, John. I mean, this is actually the culture, just digging in on this conversation. And this is very similar to our culture, the accountable equity and things like that. So it's this idea of just trying to put as many good people in the same space. And the other big thing about you, Robert, and I'll I don't know if I've even asked you this directly, but I think one of your strategies is time, time in community. And I think I've probably been to over maybe a dozen, and I brought large groups at times to your seminars. And, I always feel like someday Robert and I will build a relationship more than just getting to know each other. But I always but it takes time. And Robert's taught me that. Like, you got to put the time in. It's not one visit and we're all best friends. It's more like, who really is committed to this culture? And in the sense of the real estate guys, the culture is a learning culture. It's a sharing culture. It's sometimes collaborative. It's all kinds of great things, right? But it's not really a hunter's culture. And as a matter of fact, I think you dissuade that big time, right? You don't want anybody in there like hawking a deal. You want everybody to be patient.
Well, and I think that's part of when you have a culture like you guys do and you lead with it. There's people that have a culture, but it's very backstage. When you lead with it, then you attract the right people and you repel the right people.
Yeah.
And not saying that anybody's better than anybody else, but I know in our business, and I'm sure in your business, there are certain folks that are much better to be involved with you and partner than other people. So you want to make sure you have that meeting of the minds. So we're just really open about it. From the time you walk into one of our events, you learn pretty quickly what our culture is all about. There will be no run to the back of the room today and today only. This is the lowest price. There'll be none of that. In fact, we don't have anything else to sell you, although we'll have dozens of things to point to and suggest and books to read and events to come to. But there's no hard manipulative sales techniques.
Not at all.
Now, some people appeal to that. You'll never see us flash a check in the front of the room. But I've certainly been to those seminars where they're showing check after check after check. And, it's just style and philosophy and culture. So I would urge anybody to make sure that you're developing purposefully what the culture is in your organization. Even if your organization is just a few folks, what do you stand for? What's important to you? Which hill will you die on? When it comes to articulating, a lot of what we do is the same as everybody else. But when you can articulate the difference, your unique selling proposition, that makes the difference, right? There's a lot of hotels. That's different than when they experience one of your hotels, right? Because you guys have a culture and it shows all the way down to the employee. And so it's just something people can feel. It's not even obvious, but when you're around it, when you're around strong culture and good leadership. And it takes time to build. Good, solid relationships take a long time to build. And the reality is 20 years from now, it's going to be 20 years from now, whether you take the time to build great relationships or not. I can look back and say I have just amazing relationships with world-class people, and I'm blessed to have that. And it's not an accident.
No,
that's for sure. Man, I have so many questions and so many notes here, Robert, but I'm trying to whittle it down.
Well, you might have to have me back for the 500 or 600 episodes.
All right, we will.
Like that.
100%. You had talked earlier when you started out, you were one of the few real estate shows, a pioneer, the real estate guys, and then Bigger Pockets, the podcast kind of, I think, mirrored off of what you were doing, which they're incredible as well. Now there's so many podcasts, so many books, like you had talked earlier. I mean, I know people that have one or two STRs and they're writing books on Airbnb. It's like, I have a fitness background of 20 years. And I used to say, authenticity cannot be masked. Well, with the internet, authenticity can absolutely be masked. So what do you recommend people to, like, if they're looking into real estate or some other thing, how do they go about the process of distilling it down to something that is real and can give them tangible advice?
That, John, is a world-class question, because in the age of information almost becomes a commodity. And yet without information, we don't get to that next level. We're only able to become better when we learn and get feedback and learn from others. And our favorite thing is to collapse timeframes, right? If I can take something that took me 20 years to learn and teach it to you in a year, well, that is so much better, right? More sooner is better. And so I think today I would recommend to folks that they start wide. Don't subscribe to 40 podcasts because you'll never listen to them all, but listen to 40 podcasts. And then you'll decide after, be strategic about the one you listen to. Most podcasters full of description. You can see who the guest is and listen, and then just see if it resonates, and something will resonate. For years, we've always said, don't just listen to us, listen to everybody's stuff, because none of us have cornered the market on information. And even today, many of the people we collaborate with, they have shows, we have shows. We get better by being together. Always. I would love to find out what people who are in the market actively think, which is, while I've been doing this show for all these years, I get to have that conversation at least once a week with somebody. You guys know how that works. You meet extraordinary people that way. And the great news with podcasts is anybody can listen into that conversation. When you guys have an awesome guest, somebody can listen in, and then maybe that's how they find another podcast. So I'd start wide, and then I'd start pruning the tree pretty quickly. Like there's shows out there on flipping real estate. If that's what you want to do, pay attention to those shows. If instead what you want to do is build a long-term portfolio, well, that's a different set of shows. And I would just be discerning about it. I have about 8 podcasts that I listen to, I will say almost religiously. I might miss an episode or two, but because those are the ones that really resonate with me. But there's another 50 or 60 that I could poke around with and see. And, I turn my my off time, if you will, into time. I don't sit at my desk and listen to podcasts or even watch much on video, but while I'm driving, while I'm exercising, while I'm walking, I put good ideas in my mind. And, there is a secret people use, which is to listen at a higher speed. No one does that to your podcast, but I know when I meet somebody, I talk fast and they act like I'm talking slowly. I know what it is. But it is quality, not quantity. It starts wide, and then as you go along, you will have somebody or somebodies that will resonate with you. Maybe it's because you can relate to where they are in their journey, right? Sometimes listening to the guy that's been doing it for 5 decades is too much. You want to listen to the guy that's been doing it for 5 months. So I would say that there's a lot of influencers out there today that talk more than they do. So I just always want to know what gives them the right. Have they earned the right to have the opinion they're sharing? When my wife and I learned we were going to be parents, we wanted to learn all the things, but we only asked people in our life that had kids, because there were lots of people who didn't have kids that had opinions, but they hadn't really earned the right to have an opinion about raising kids, in my mind. So you want to be around people that are going where you're going. And I'm also just a huge proponent in live events, getting together face to face, belly to belly. Listen to podcasts, read books, go on webinars, but you got to get out in the real world, because that's the only way relationships will happen.
Yeah. And as we learn from you here coming towards the end, I'd love to learn a little more about if you could give us the story here. So we're listening, we're learning about your philosophy of how to build community and culture. We're learning about how you got into the education world of real estate. We know you started I don't think people picked up on this nuance, is that you and your dad were focusing on residential real estate with income. You were selling investment properties to investors in the ecosystem of a regular brokerage. And you kind of coined that middle. And as a matter of fact, the godfather of real estate, your father, I think, had a whole book about that, about selling investment properties through that brokerage. But talk to me about your journey. Where are you today? If you've never shared it and you don't want to share it, that's fine. But what is your portfolio? Is it X number of doors? Is it X number of businesses I own? How do you measure your big portfolio, and would you share it?
Yeah, it's a great question. So this is a constantly evolving thing for most people. When we start out, we make the best decision based on what we know then. But zero-based thinking is knowing what I know now, would I make the same decision? And if you have property, you have a portfolio, think about a property you have today that you probably wouldn't buy again. Right? That's zero-based thinking. At the time, I was really excited about this property, but now that I've owned it for 5.5 years, in hindsight is like that. So what I've done over the years is specialize in residential properties. So I started, my first property was a duplex, and then I would buy a house and another house. And my original investment philosophy was every time I wanted to move, I just keep the other house as a rental. And that worked pretty well for 4 or 5 houses. And then I ran into a mentor who said, Robert, why would you keep a house as a rental property that you didn't buy for rental purposes? You just happen to live in it and that's your philosophy? And I went, oh, I never thought about that. If I was more strategic, I might get a better asset. So then I started becoming really strategic, but still all residential, single family, multifamily. My largest apartment building, my first 10 years was 120 units in Arizona, 121 units. Then we bought 151 units in Las Vegas, and just little by little started to acquire properties. And then I got the development bug. And for whatever reason, I was investing passively. And this is an important part of the story because you can actively invest. You can be the one rolling up your sleeves and painting the rooms and all that stuff, or you can passively invest. I can give you 200 grand and you go do something awesome with it, like I know you will. Or there's the hybrid where you can decide you're going to raise money from other people when you run out of your own cash and ability to qualify. And so at each one of those steps, you become better and more interested. And for me, I can get exposure to things that aren't in my portfolio. That's why I started in commercial and development. I was able to put some money, $50,000 that I had squirreled away, into an investment with a group that was building office condominiums. And it was just a passive investment for me. And they said, well, it's going to take us 2 years and we're going to return, 20% annualized. I'm like, okay, great. Well, a funny thing happened. They actually returned more than that in a shorter period of time. And I was like, this is great. While I'm busy doing what I'm doing to buy and create and own real estate, I got this little passive investment that it's doing well. Well, lo and behold, that became a big part of my personal investment philosophy. And so today I love to come alongside folks that are doing the big deals. Now, Josh, we have some big deals. So it's not that I'm shying away from being active in my real estate portfolio. We're pretty active. But at the same time, if I can get exposure through real estate syndication to a market I don't know, to a product type I've never been in, to an investor or operator that's doing good stuff, I probably couldn't even afford to hire them, but I can invest alongside them. That's how I grow my portfolio today.
That's a mind bender, what you just said. And I think about that every once in a while. So when you're around an operator and you're like, that operator is probably very good, and if I had a deal, I'd hire that operator. Or you could have invested in that operator because you probably couldn't have hired that operator. That goes through my mind every once in a while too. I'm like, you know what? At the end of the day, I guess it's like when you invest, John, when they invest with our group, it's as if we get to be their president of their family office portion of their business. It's like, that's why they might look at us that way.
Well, Josh, how many folks out there are able to buy a fabulous multiple, dozens or hundreds of acre property with an incredible resort or build that? Very, very few. Very, very few. But when they can come alongside and let you guys do the hard work, but they can benefit from that, that's where everyone wins. That's why I love syndication so much.
I do too.
And in my personal life, I've certainly syndicated and raised capital to do those deals. And that's a great way that we can take passive investors' income and capital and put it to work somewhere. But I do the same thing. Like, I don't want to have an Airbnb that I have to manage and figure out. But if I have someone who's putting together a fund to go buy 50 Airbnbs in 5 different marketplaces, great. Now I get exposure in my portfolio to short-term rentals and to different marketplaces. So I think too many people are focused on a saying which makes a ton of sense, which is get rich in a niche. I totally agree. But when you have all your eggs in one basket, then what happens when that basket falls out of favor, right? Or there's a challenge, or there is a legal challenge, whatever it might be. So I don't think you just need to be in a lot of places. Today, we have properties in lots of states and actually more than 6 countries. But I don't think you need to do that. You don't need to say, oh, I'm going to invest. Every place we've invested outside of the U.S. has been very strategic, and it has served us well. But I didn't start that way, right? I started investing where I knew. And little by little, I came up with this philosophy, which I've said for years: live where you want to live, invest where the numbers make sense. I lived in California, and real estate got more and more and more expensive there, and landlord-tenant law was not very much in my favor. So I thought, well, where could I go where prices are lower and they treat landlords better? And that sent me on a journey. And because everything changes, then your personal investment philosophy changes over time too.
That's fair. That is very fair to let people know that, because people like you who have the ability to set goals and to seek your clarity and find it and then hone your focus, The challenge is that you may have set the goal of, so many people start to say this, I want 30 houses by the time I retire, paid off. That's my life's work. And then at some point, 15 years later, they now are buying apartments and they're no longer even owning houses. Was it a wrong thing? No, they needed the clarity to get the game going. And then I guess clarity led them to another plateau or another strategy. And it seems like you just talked about that in a fluid way. Like you're like, look, but if we were to dissect your portfolio today, single family assets would be wholly owned. A lot of them, let's say, but would be owned by you, and you have a management structure to keep them rented. And then the rest of your diversification strategy is very strategic, and you're doing it a lot of times through direct investing, private syndications.
And there's so many nuances in that, right? Depending on tax benefits and there's just a ton. But it's not to overcomplicate it. Nothing wrong with having a modest goal to start. And what happens is as you start to climb up the mountain, you realize, oh, this is only the first hill. There's a whole other mountain. I love it when investors, we did our investor summit the first time Robert Kiyosaki came in 2012, and we had a panel. And the panel was all about your first investment. And on the panel was Kim Kiyosaki and Kenny McElroy and my dad and Tom Wheelwright, CPA, and Amazing. One other person who all started with the 2-bedroom, 1-bathroom unit.
That's nice.
And I was the overachiever because I started with a 2-bedroom, 1-bathroom duplex on each side. So times 2. But without exception, everybody started with just one property. And today we all have a lot more than that. So that's what you do. You start where you are with what you have right now. And you learn to be clear, to focus, to get around the right people, and live below your means so you have capital to put into the future.
Yep.
Love it.
I started with a 2-bedroom, 1-bathroom row home in Philly. That is funny. Very interesting.
It's awesome.
Well, thank you. I know John usually wraps us up here. How can we reach out to you? And thank you so much. Before we end the 400th episode, the reason we asked you to be on the show is because as we were getting inspired by real estate guys' education, and we were going to seminars before we raised $1, you taught us 2 great principles. One, when you take $1 from someone, you've created a second business. Even though you're Mr. Fancy hotel guy or Mr. Fancy or Mrs. Fancy apartment building, you're an apartment building person, and now you're a capital person too. Yeah. And that really impacted us, and that set the course for accountable equity. But the second thing was the second big advice was everybody in this room who's thinking of doing a podcast, come on over here. And so you bring us over with, I think you had a wooden bat behind the woodshed, and you said, I tell you, if you're going to do it, do it. But it's not something you might want to take lightly. I can't remember your whole speech, but, and I remember John, it was before I met you at the time. I think we met each other, but I said, look, I'm just going to commit to doing it. I think we'll get better at it over time, and eventually we'll have a hockey stick. But we're still on that fight, man. Robert, we said 1 week at a time, one step at a time, and I appreciate John being with me on this journey, and thank you for setting us up on the journey.
Well, I love to watch people actually do the thing. So many people say, yeah, I'm going to start a podcast. And, I'm at an event. I'm like, if that's you, just come talk to me for 90 seconds.
That's what you do.
It's not that I'm, any expert on it. I've just been doing it longer than most other people. And you just have to have that commitment. The internet is littered with broken, half-built podcasts. 13 episodes, you never hear from them again. Their most recent episode was in 2019. Okay, they didn't have clarity as to the why, and they didn't have the commitment. And when that happens, most of the shows I listen to are people that are great at what they do. They have a unique perspective, something to share like you guys do. So it is no surprise to me that you made it to 400 episodes. And I am absolutely honored to be on this show, and have me back sometime.
How do we reach out to you? Because so many of us want to go on your cruise, and so many of us want to go to your seminar.
Yeah, well, you can find us at Real Estate Guys Radio, realestateguysradio.com. If you want to learn about the Investor Summit, it's investorsummitatc.com.
Thank you so much, buddy.
Awesome. Thank you, Robert. Thank you so much. Amazing episode.
Damn straight. We just got we got to the end of another great show, and everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.